Good morning. I would like to call the meeting in order, so please get back to your seat. Thanks for joining our weekly hybrid MLS breakfast meeting. My name is Wai-Ming Lee. I'm your October program chair. A little bit about myself. I was a realtor. I don't know if you remember those days when we have the books, the fake MLS book. That's when you know how old I am. So we used to go to the board on Thursday and pick up the books, carry it back to the office. And then when an agent is interested in our hamburger, you just look into the book, okay? Nowadays, technology has changed quite a bit. So I'm just waiting to talk to Derek Talbert, who is an AI expert, and ask him to help me how to write some ChatGPT so I can just push a button or two. And then all this listing will come up. And then I don't even want to answer my call because I got a lot of people calling me every day. And then this as my bot answer your call and deal with your questions. And that's where the technology is going anyway. So that's a little bit about myself. Now is our main event. We're going to introduce our speaker. Let me tell you a little bit about Julia Walras. She's a Deputy Commissioner of California Department of Insurance. Since appointment in 2019, the department has held more than 1,200 town hall presentation and events, meeting with hundreds of thousands of consumers throughout the state who have been adversely affected by the state's insurance crisis due to unprecedented wildfires, floods, earthquakes, and the pandemics. Julia has over 25 years of public and private sector outreach, education, and management experience. She oversees constituents outreach with federal, state, and local elected district offices and leads the department's expanded efforts to assist wildfire survivors, local governments, small business, and consumers in assessing the department's many services. Julia holds a Bachelor of Arts degree in English Literature and Political Science from Petaluma Nazarene University, as well as a master's degree in Leadership and Organization Study from Azusa Pacific University. Let's give a big hand of welcome to.
Morning. It is a pleasure to be here this morning. We are on behalf of Insurance Commissioner Ricardo Lara. I am pleased to be here so that we can talk about insurance. I went around and said hello to a few of you, and I know that insurance is definitely top of mind in many areas of the state. And so as I was being introduced, you heard that we have held a lot of town halls up and down the state, specifically because we realize that the insurance crisis is not just an issue of areas in the forest or in Northern California. It is very much so an issue that we are having everywhere in the state. So thank you for your time. I really appreciate it. The reason that we come and have these meetings and have these discussions with you is very much so that you understand what's happening, but also because that is how we educate ourselves to see what is happening in your areas, in your communities. And we want to make sure that we're able to take that information and use that to, to inform us for the work that we're doing within the department as well. So without further ado, thank you very much for being here this morning. It's an early morning, so thank you. Just wanted to give you a general rundown of what is happening with the insurance market. I was just talking with someone, they were just telling me this is not an issue of just California. This is an issue all over the country. And actually, it is an issue all over the world. Right now, the commissioner was scheduled to speak in Nepal at a conference this week, and actually had to cancel that because they are also going through some flooding over there, and so there have been just a lot of devastation as well, and so that is happening everywhere. So we have seen that because of that, inflation has just created an unprecedented financial stress on all of our markets, and particularly in the insurance market. That has been a major issue. So we have seen that the costs to rebuild, the supplies, the materials, the labor shortages, all of those costs are truly just making insurance go up very, very high. Along with that, the risk that we have here in California specifically, we have a major risk. As you know, we keep seeing that insurance companies are trying to trying to figure out trying to level out their risk. And of course, in California, we have the wildfires, where we have seen the most devastating wildfires in our history within the last 10 years. So all of that, besides the global inflation, all the natural disasters have truly just made insurance just a major issue. We can go to the next slide. And for California, what does that mean? That means that we have 12 insurance companies, and I am sure that, we can all sit here and probably name them because of all the commercials, right? But basically, these 12 insurance companies are the ones that handle 85% of the entire state's homeowners insurance market. That means that even when insurance, in the country specifically, in California is the largest insurance market in the country. We sell more insurance here in California than anywhere else in the country. And we are actually, according to the National Association of Insurance Commissioners, California is actually only second to China throughout the world of how much insurance we sell here in California. So the insurance market here is absolutely, because it is the lead insurance market, we are absolutely going to be feeling all of the ebbs and flows of the market here before anywhere else. So we have seen that of the top 12 companies that handle 85% of the market, 7 of the 12 of them have actually either paused or restricted new business. So I'm sure that you as realtors have probably have seen this, that many insurance companies are just not working on that, not trying to do that. So what did we, how did we get here? Is we have the California FAIR Plan. So the California FAIR Plan is the insurance of last resort. Basically, the FAIR Plan was created after the Watts riots in the 60s. And the reason that that was created was because those homes in South Los Angeles were not able to find insurance. They just were not able, nobody was selling insurance to them. So the legislature created the FAIR Plan, which basically said, insurance industry, you guys create a system where all of you can take the risk of those homes together. So that, that plan was made. So, and the expectation was that people then would be able to buy insurance from there. But when you buy insurance from there, from the FAIR Plan, you're basically paying for the entire year that you need the insurance, but you're also paying the entirety of the risk. So the FAIR Plan is a lot more expensive than any other insurance that you will get, because they will then pay out exactly what everybody puts into it. So it is very much so, it is very, very expensive. So the FAIR Plan was only supposed to be what you use for maybe 2-3 months while you looked for other insurance and while you were able to find something else to cover you. Now, the FAIR Plan is actually the only insurance that you can find in many areas, particularly areas that are, that have a higher wildfire risk. So that's the big problem, because then the FAIR Plan has actually increased tremendously. So when we went and we met with all of the different people that were meeting throughout the entire state, one of the things, and then also meeting with the insurance companies, understanding what the biggest issues were, the insurance companies told us there is too much risk in California. We can't take on that much risk. So what the commissioner did was he gathered every single agency that deals with wildfire, because wildfire was the biggest risk. So every agency that handles wildfire, and said, everybody is doing something different about wildfire. So if you would go and you would, clean up your home and fix up your home, the city would say, okay, that's, these are the things that you need to do. Then the county will come and say, no, these are the things you need to do. Then CAL FIRE will come and say, no, these are the things you need to do. And somebody else. And so that all these different agencies. So the commissioner gathered everybody and said, let's come up with very specific things that people can do, and that there's a list that you can check off and then say, these are the things that I have done so that my home doesn't have so much risk. And so that is protecting your home, your immediate home, and then your immediate surroundings, everything that's around you. And then the last part is basically protecting your community. Because what we know is that if you do everything that you're supposed to do, and the house next door catches on fire, guess where those embers are gonna go? Right into your home, right? And so then you're gonna catch fire too. So the expectation is not only is it just you and your immediate surroundings, but then let's work with the local community. So in the next slide, you will see that these are the very specific things. Oh, I will have, you will be able, you can see all of this, these specific things with the Safer from Wildfires framework. And it is basically just 6 things that you can do. You can go back up, please. So you can see that there's very specific things that you can do for your home, for your immediate surroundings. And then for your community, what we came up with was, if you are part of a Safer from Wildfire community, so there's different groups that you can join, and it only takes like 8 houses to create a Firewise community. So if you become one of those Firewise communities, what you can do then is help each other out. The idea is that if you know that there is somebody within that community that is not able to take care of their home because maybe they're elderly or they can't really do it, then all of you together can help that home. But also, you can apply, by being a Firewise community, you can apply for grants from the state so that the state can then give you money to do different things. So some people have applied for this money, for this funding, and have used this funding to get new vents, get new windows, put for, different things that need to be taken care of to upgrade those areas so that we can bring down the risk. So those are the different things that you can do. And we have a lot more information that we can share on that on our website. Our website is insurance.ca.gov. I have my card here, and I will make sure that everyone gets one. But it is very much, so you can see our website there, but there you can find information on the Safer from Wildfires framework that that people can actually do in their homes. Now, the FAIR Plan, what the commissioner did was, not only did we put everything together that this is these are the things that we can do, but if you do those things, then you can actually get, can we please come back up? Sorry. So that you can actually get a discount on your insurance if you do those things. So there's that possibility. But so the FAIR Plan has actually started to provide discounts if you have done those things. The more things that you do, the more discounts that you can apply for. The FAIR Plan has also increased the availability of insurance up to $20 million per location, so that an HOA for commercial properties, an HOA could apply for that and at least be able to have insurance while you continue to look for something for in the regular market. Then the other thing that the commissioner did was, insurance companies will come to you and say, we can't insure you anymore. We will not renew your policy because your wildfire risk score is too high. So then you would tell the insurance company, it's too high. What can I do? What is it? What's the number? What can I do? And show me what is it that is wrong. And so they would say to you, I apologize, but that is proprietary information. So you couldn't really do anything about it. It didn't matter. So what the commissioner did was he opened up those books and said, if you're going to say to someone that their wildfire risk score is too high, you need to let them know and what it is and how did you decide that that was too high? And then you as a consumer now can go back to the insurance company and say, I don't agree with this. Then this is why I have done this, this, and this. And so then you are able to then tell the insurance company and appeal that score. So that's something new as well that we were able to put together. So those are some of the tools that you'll have there. On the next slide, then we realize that even the risk, trying to bring down the risk is not enough. So what we need to do is try to figure out what more as a department and as a state we can do to increase insurance availability. So what we did was the commissioner got together with the insurance companies and everybody that is involved in insurance and came up with a plan and an agreement with the insurance companies. And he said, if I need you to write up to 80, no less than 85% of business in the areas where we have the biggest amount of people on the FAIR plan, where we have the biggest amount of need for insurance. So in order for you to do that, what I will do as a commissioner, and we will work with you on, is make sure that then all of those people that are in the FAIR plan will be able to get out of the FAIR plan and go into the regular market, because all of you will then be writing more insurance. Sounds fantastic, sounds great. The thing about it is, Commissioner, under Prop 103, under the law, we are not allowed, the commissioner is not allowed to tell insurance companies that they have to sell insurance. We can't compel or make insurance companies sell insurance. Insurance companies are not utilities, it's a business. And so because it's a business, we are not allowed to make them do anything. What happened after, how many of you remember the Northridge earthquake? Right? That was some traumatic stuff. So when the Northridge earthquake happened, the insurance companies absolutely lost a lot, right? Because there were so many losses. So the insurance companies, the legislature and everybody just decided to jump in and be like, okay, insurance companies, you must cover everybody and you must figure out how to take care of this and move forward so that everybody can have insurance. Insurance companies decided that they were not going to do that. 95% of insurance companies stopped doing business in California altogether. So if we think this is bad right now, back then it was 95% of them decided not to. So the legislature was forced to create the California Earthquake Authority. How many of you have heard of the Earthquake Authority? Yeah. So guess how many people actually have earthquake insurance? About 10% of homeowners have earthquake insurance. That means that nobody has earthquake insurance. And we do not want that for fires, for wildfires or fires as a whole. So there is no way that we can make insurance companies sell insurance. So what the commissioner said was, okay, I need you to come back and start selling insurance. So what we will do is we will work with you so that you can use catastrophe modeling. Catastrophe modeling basically means that you can use, technology to be able to look at a house from, satellites or whatever it is that you do, be able to look at a parcel of land and be able to see exactly what it is, that you're looking at and that you're going to be insuring. And then from there, be able to figure out, how much risk is there? Is there a fire hydrant nearby? Is there, like how much investment is there from the community to make sure that this area is safe? All of those different things. So if an insurance company is able to do that, then they'll be able to figure out exactly how much you should pay for insurance without just, right now, insurance companies are saying these entire zip codes we're not covering. right? And so then this way, with catastrophe modeling, you'll be able to look at specific parcels of land. The other part of this is that insurance companies have to buy insurance for themselves. That's called reinsurance. So reinsurance, the reinsurance market is actually mostly in Bermuda and in other places. Reinsurance is not regulated by anybody in the world. And so because of that, you see that reinsurance costs are fluctuating and can go really high one day, lower the next day. It's just crazy. And so insurance companies have a really hard time to figure out what is the actual risk because they have all this expense that they have to do with reinsurance. And so what Commissioner Lara has agreed is that okay, you could now count insurance as an expense, reinsurance as an expense when you apply for premium for rates, so that we can know what it is. Then finally, the last thing is we are modernizing the FAIR plan. How many of you know of properties that cost more than $20 million? You have heard of properties that cost more. How many HOAs do you know that cost more than $20 million? There's some HOAs that cost more than that. So what we are looking at is actually in using the FAIR plan to increase insurance availability for HOAs that are $20 million per structure rather than for the whole thing. So then that way, and it's up to $100 million for those homes, for those HOAs that need that. So all of those things are the things that we're working on right now. Commissioner Lara has the expectation that the department, with the support of the governor and the legislature and everyone involved, we will have all of these things done by the end of December. So the expectation is that by the end of December, all of these things are in, and then we will then have the ability to get insurance back on track. We have already heard from Allstate and from farmers that they were going to, the minute they are able to utilize this at the beginning of the year, that they're going to be opening up throughout the state. So we are expecting that is actually, these things will be moving the industry forward. So you will be able to see more availability. On the next slide, I just want you to see where is it that the FAIR plan has the most amount of usage. And you see that it's mostly in the areas where we have seen a lot of wildfires. And so that's where we have a bigger concentration of the FAIR plan. And the expectation is that when we have these things in place, then the insurance companies will be able to come into those places and open up open up in those areas. However, what I want to make sure that you're aware of is that insurance companies are going to be looking for those homes that have the least amount of risk. So if a home that you are, working with, or, when people talk to you about this, just, remind them, you gotta, there are very specific things that you can do to make your home, to make your home safer. And if your home is safer, insurance companies are going to want to cover you. And so at that point, if they are in the FAIR plan, they will be able to come out of it because they have a lot less risk. And insurance companies then are going to be looking to sell you insurance. Whereas right now, it's the other way around. We are hunting for insurance. We are looking, desperately for insurance. So the expectation is that once we make that switch, that we'll be able to have insurance companies looking out to try to get you to get coverage as well. On our next slide, I want to make sure that you're aware that where you can reach us. Our website is insurance.ca.gov. Now, we have people there that are experts in insurance, and so they are able to review if you are having any type of issue. We have experts there that can review your insurance policy with you. They can be a conduit between you and the insurance company and are able to many times help to fix, any type of problem. So we do have, it's an 800 number. You can talk to somebody live, Or if you want to do it, a lot of people don't like to talk anymore. They like to just chat. We have that availability as well. You can do that there as well. But all of these things are available for you. We want to make sure that I may not be able to talk to you specifically about an insurance policy because that's not my expertise, but we do have experts who are able to review all of these things with you, and they'll be able to help you with that. And with that, I want to just open it up if there are any questions.
Does anybody
I'm
have any
happy to-
questions? Any questions, please line up at the front.
Thank you so much for being here. This is an a great topic. My question is this: the weather has extreme weather now. I mean, hurricane in Florida
Yes.
destroyed all the way to North Carolina. The fires over here, which is still on,
Mhm.
and Running Springs, all of that. So that's going to have obviously an effect on all of this, because that's not going to change much in the next few years. So how is that this extreme weather conditions that are already happening will be a part of all of this? How will that be rearranged? Because that is
That's a
It's not
major
gonna
issue.
change.
No, absolutely. Thank you for your question. That is, when I first started, I said, these are the major things that are happening that are making the insurance industry lose a lot of money. We are going to see right now a lot of movement in the market. How many of you have seen the State Farm has closed a lot of policies, and it is going to continue to do so, and maybe do a lot more dropping of insurance. The expectation is that, well, just so you know, State Farm actually has 21% of the market in California. So State Farm is the largest homeowners insurance in California, in the state. So the next one is Farmers, which is at around 15%. Then the next one after that, and then all the rest are 6% and lower. So guess who's going to be dropping people most? State Farm, right? State Farm is definitely is looking at dropping about 1 million folks throughout the next 5 years altogether from where they were. So it is continuing. They are continuing to just kind of lower their footprint because they are so saturated in the area. They have too much risk here. So with the sustainable insurance strategy, the expectation is that then all of the other, there's 118 companies in the state that are able to sell insurance, homeowners insurance. So the expectation is then that all of those other companies are going to then start picking up the pace, and then they will then pick up those that State Farm is dropping. So what we need to do then is learn, is try to figure out how to shop for those. But with the sustainable insurance strategy, the expectation is that then insurance companies are going to be competing again for your business. And so that's how we're going to start getting a lot more policies there. But that is, we're working on that. And the expectation is that more people then will learn about keeping their homes safer and doing everything they can to make sure that if there is a fire nearby, that their home is safe. How many of you saw that home in Hawaii where all the other homes in the area burnt down, but this one home right in the middle of all the devastation, completely okay? That's what we're looking for. We're looking for all of our homes to be completely okay. So those are the things that we need to do to make sure that we're there. Sir?
Yes, next question is from Victor.
I have two to the Vince Veneziano. I have two. One is the cost of repair. Lucky those contractors which they will getting a contract from insurance, because apparently on the repairs, I had a case to repair one tile and the owner gave the tile to the contractor because they cannot find to replace one tile because somebody threw a rock. And it cost over $12,000 just to replace what I could do it myself for less than $100. And the cost, what to create the insurance company to go out, and unfortunately, if we don't get, nobody can control that.
Yeah.
And the second question will be the earthquake. insurance. The reason which a lot of people, they don't have because of the deductible, the deductible situation discourage people to getting. Because if you have a $700,000 policy and just the deductible alone, it's about $70,000 before they can start to pay a penny. And the premium, it's just so whatever it is, nobody will getting it because apparently says the house have to go down before they can pay a penny.
Thank you. Thank you for your questions. We have, so the first question was in regards to control of the cost. The suggestion would be that if you do have something that you can fix at home for a lot cheaper, it is better for you to do it on your own rather than actually passing it through to your insurance company. Because then what that's going to do is going to, first, it's going to be so expensive that the insurance company is going to have to pay out a very expensive rate. But then also, then you kind of put a target on your back to say, well, these people, you know, I have all these other homes that have never, you know, used their policies, but this one is using it. We can drop them because they're going to use it again, you know, so then for something small. So in a sense, if you are able to fix something on your own, it's much better for you to do that. If it is something that is small, something like $100, it will cost you $100 rather than if it costs the insurance company, you know, exponentially more, because it's going to be, you know, difficult for you in the future. So, you know, you got to weigh your options there, right? Like what makes better sense. Now, the other question was in regards to earthquake insurance. Now, when you get earthquake insurance, the deductible is very high. However, what you got to remember is that when you do have a loss that is a lot more, you will get that payment. They will just take down the 70 off first, right? So then you will still be able to have enough money to, or should be able to have enough money to fix whatever it is that the issues were. It's just that you're, you know, the excess amount you will, you know, it will just be, it will be taken from that. So you don't have to come up with the $70,000 in the immediate yourself. Right. So that's one thing that we kind of remind people that you don't have to come, like, because how many of us actually have $70,000 in the bank just sitting there waiting, right? I know I don't. So that's the, you know, that's the difference, that you are able to, you know, the insurance company will be able to cover it. It will just not give you as much as, you know, just the $70,000 less from there. So it is still a good, it's still a better bet than not to have it, because then you will lose everything, right? So you will have nothing there. So thank you very much for your question, and sir, thank you.
I have a couple quick questions. In what situation the consumer will qualify for the FAIR plan? And then when you get the FAIR plan, do you have any more cap or limitation on the coverage?
So when you get, the FAIR plan is available for anyone. So it's basically the way that it was set up was the FAIR plan is the insurance of last resort. It is absolutely, you know, the last thing that is available so that you can have insurance and you can continue to pay your mortgage and, you know, do all of that. Here's two things about the FAIR plan. The FAIR plan is only fire insurance. That means that when you purchase the FAIR plan, you still have to purchase a difference in conditions policy, which a difference in conditions policy is for everything else. You know, somebody falls in your house, somebody, you know, anything, all these other different things, you know, there's a dog bite. I don't know, like all the, you know, these different things. So you still have to buy that wraparound insurance. And the only reason the FAIR plan will not cover you is if your home is completely so run down that they can't, that nobody can insure you. But otherwise, the FAIR plan, you know, is available for everybody. If you have any issues getting the FAIR plan or getting anybody in the FAIR plan, you get with a broker that can purchase insurance through the FAIR plan. If you have any type of issue with that, with trying to get insurance that way, with a fair plan, you can contact the department at our 800 number, and we will be able to contact the fair plan directly and help you get the insurance that you need. Then the policy, how much can you actually get covered? When Commissioner Lara came on board was in 2019, and the policy that you can get as a home was a $1.5 million policy. That's it. And in California, 1.5 million for a homeowner, sometimes it's not enough. So we increased that to $3 million. So at least that is available. If you still need more than that, then you'll be able to purchase insurance. You purchase the fair plan plus another policy to be able to cover that. So right now it's $3 million for a home. For a business, we have increased that to $20 million for commercial and HOAs and camps and, any type of like farmers, any type of a business that needs a lot more insurance. It's $20 million for the entire policy, and then we're working to make it so that next year we'll be able to do $20 million per building for a business. So thank you all very, very much for your time. Greatly appreciate it.
On behalf of West and Gabriel Board of Realtors and MLS Committee, give a token of appreciation. Come in. Please join us next week as we welcome Dennis Lee, CoStar Group. His topic will be learn what agents are using to sell home faster, win more listing, and grow the brand. This is very important at this time. You want to figure out a way to hook the customer in, just like going to ABR class and then using some of this software that he's going to talk about. If you are in commercial business, it will be wonderful. Thank you everyone for joining our meeting today. Have a wonderful day. The meeting is now adjourned.